Hey, welcome to another amazing episode. Please, before we start, don't forget to hit the subscribe button, leave us a review, let us know what you think about this episode. Today we have Jorge Abreu. He is a multifamily investor, but he has been what it seems on every sector of real estate investing. He is a multifamily investor. He owns his own construction company. He focuses in deals in Texas, in Oklahoma, and his goals for 2021 is to reach 10,000 doors. So Jorge, please let us know a little bit about yourself, your background, and how you got started into this.
Sure, man. First of all, thank you both for having me on the show. And as far as my background and how I got to where I'm at now, I'll take you back to university. I was studying to be electrical engineer. I realized right before graduating that I didn't want to be an engineer. I didn't really want to work for a big corporate company and work in a cubicle all day. So I started looking for individuals that were very successful in what they had done, and a lot of that led me back to real estate. So, I started digging more into real estate investing. Meanwhile, I graduated with my degree and I went and I got a job working as an engineer in the engineering department of UPS, but my side hustle was real estate. So, finally, I did enough deals where I felt comfortable and I left my W-2. That was around 13 years ago, and started doing real estate full time. Then I started with single family. So I guess I should mention that, I was doing a lot of fix and flips, a lot of wholesaling, got into some smaller multifamily. But maybe about 3 years ago, I kind of looked back at what I had built. I had also started my construction company to help scale the fix and flips, but everything I had done till then was very transactional. It was from one deal to the next, and I hadn't built that wealth that I really seek to do in the beginning, and that's what kind of led me into multifamily. If I remember back, I had some clients with the construction company that were multifamily syndicators. And before that, I had never really thought about purchasing a big, 200 plus unit property. I just didn't think it was doable. And then they told me about syndications and how they purchased the properties. And man, that just got me going and digging into how someone can do this. And once I had the knowledge and started putting it to work, underwriting, looking for deals. At first I tried doing both the single family and the multifamily, but I realized, with the construction company, single family investments, multifamily investments, I needed to focus a little bit more if I really wanted to grow the multifamily side. So I put some key players in place on the construction company so I didn't have to be so involved on the day-to-day. I tilted my focus on the construction company to just multifamily and commercial. And then at the same time, I stopped doing single family investments altogether and just went all in on multifamily. 3 years later, now at 1,720 doors. And like you said, original goal for next year was to reach 10,000. COVID may have slowed us down a little bit. The virus had a different idea, but
for everyone,
yeah. I mean, we're still looking for deals and we're still doing our thing. But yeah, I mean, that's how I got to where I'm at now.
That's awesome, man. That's awesome to hear your aha moment. So what attracted you so much to the syndication formula? Because I know when we figured out the syndication formula, we were like the same thing, like, oh wow, this is how they do it, like amazing. Yeah. So what attracted you to it?
I mean, man, there's so many aspects, but one, the commercial financing, the loans you can get are so much more attractive than your single family, or the non-recourse is a big portion of it. And then prior to COVID, coronavirus, whatever you want to call it. The bridge loans and everything that you can get, the amount of leverage. And then also you've got the tax benefits. I mean, the tax benefits are massive, especially if you can claim to be a professional real estate investor. I would say those two things, and then you can keep throwing, the cash flow that you can accumulate. And then once you refi or sell a property, the capital you get from that.
Yeah, I hear you, man. So, diving into, obviously you scaled, you didn't 1,000 units plus, no one does it alone or without a team. And that multifamily is a team sport. How did you start? I imagine you sold off your single families, right? You said you got done with doing that. Is that correct? And then how did you start that process of building, hey, let me find an accountant, let me find this team, let me build someone to find capital, all that stuff. How did you go from there?
Yeah, started with a lot of networking, going to a lot of networking events, putting myself in the right places to meet those individuals. And then when I decided I was going to do this, I decided I was going to do it more. I was going to build a company, not just do it to the scale of me alone can handle. It was more of, I'm going to build a team around me, and we're really going to take this to the next level. So I went in with that mindset and just started adding pieces as we went on. As far as the power team, as far as like the attorney, the brokers, that was a lot of networking and just meeting the right people that you click with. And then as far as the partners, like you said, meeting, for instance, when I first started doing this, raising equity was not my strong point. So I knew I needed to partner with somebody that had that experience. So on our first deal, we took it down with a co-GP that was really good at raising equity, and kind of just used that concept on every deal.
Awesome, man. Awesome. How hard was it, or was it even hard to, talk to that co-GP to sponsor you and to get you into that first big deal?
It wasn't too difficult because we had a track record of with the single families, and we also had the construction company. So we brought that piece to the table, where we would handle the due diligence, the CapEx. We've always located the deals that we've done. So if we bring it to another co-GP, we're the ones that did the work to find the deal. So it wasn't too difficult, but I did need to put myself out there and get out there and meet the individuals.
Okay, cool, man.
How do you tie, because you did things differently, right? You had your single families, and then you had the construction company, right? So I'm pretty sure that you single-handled the construction side on the fix and flips. Am I correct? And
correct.
That's the reason why you had your construction company.
That is correct. Yeah. When we began to try and scale the single family, we ran into some issues with general contractors and felt like we really needed to have that part of it down packed to scale. So that's when we started the construction company.
And that's basically what you're doing with the multifamily deals that you have right now. Do you have multifamily deals that are that need either construction, repairs, and flipping from the ground up, or how do you tie those two?
Yeah, correct. We were using the same concept we did with the single families. We're picking up the true value add deals, the ones that need quite a bit of work, and then we're leveraging our construction company to come in and do that, and know that we're going to get it done right. We're going to get it done for the price that we knew we were going to get it done for, and at the same time, we do offer our services for other investors as far as a construction company.
That's awesome.
Awesome, man. So when you're doing, is your strategy just value add for the most part?
For the most part right now, yes. We've been looking for the deals that we can pick up at a discount price, go in there, fix whatever the issue may be, and then raise the value.
And then your construction company, so essentially you hire your construction company to do your renovations. Is that how you?
Correct. The LLC that's purchasing the property, hires the construction company to do the work.
That's awesome. And then as far as property management, are you vertically integrated? Are you third party?
So third party, both. Well, we're not. So Elevate, my company is not vertically integrated with the property management, but we have co-GP'd with some that are. So they bring that piece to the table, and then we have done third party as well on some other deals.
Okay. Which do you prefer, or is there benefits to one or the other?
I think there's benefits to both. It depends on as far as if the co-GP has it internally, there's more control to it at that point. The only con to that is, we still need to asset manage it. So if they're not doing a good job, which has not been the case, but if that ever was the case, it would be a difficult talk there, because you're talking to your partner and telling them, hey, you need to step it up here or whatnot. And then with the third party, you really have to manage them. You really have to make sure you're doing your part as an asset manager, tracking KPIs and staying on top of them to make sure. But I think once you get a good little system down with a third party, it could be a good thing too.
Awesome. Okay. And then, so one of the things I've noticed is, you utilize virtual assistants and probably executive assistants as well. How are you integrating them in key pieces of your business? Because I'm sure, I can just tell from the emails we had, you use virtuals for social media and that interaction. What else do you use them for?
We use them virtual assistant for marketing a lot, but we are looking into more of like executive admin kind of work now as well. They're great, man. If you find you may have to go through a few to find some good ones, but once you find a good one and you get a good, it goes back to systems. If you have a good system of delegating the tasks and how they get everything done, then it's great.
All right, folks. So let me ask you a question, man. So so 14 years ago, right? That's when you started?
Roughly, yeah.
Okay, so you went. Actually, you went through the whole real estate market crash, right? Like
Yes.
2006, and that's when you started your real estate business. How do you see this? Since you went through the transition, right? What's the difference from then to now, and what do you see opportunities rising up due to the coronavirus?
Yeah, the big difference is that back then it was an issue with the economy. That was more of a lasting, or we don't know yet, but I think that was going to be more of a lasting effect when you look back at what COVID did to the economy. Because before we were hit with this virus, the economy was at one of the best places it's been.
Yeah.
It was strong. Everybody kept talking about we're going to go into a recession. Since like 2016 they were saying that, every year.
Every year somebody prophesized it.
I do think it was getting close. This might have been the year. But even then it was going to be a normal recession. It wasn't going to be 2008 and what happened back then. So I think as long as we stick to a good plan of reopening, and we don't get another spike in cases or deaths or whatever, I feel that the economy is going to get back there pretty soon. Maybe by the end of next year, it's going to be strong again. So I think the recovery is going to be a lot quicker this time. And the opportunities are going to be there, but they're not going to be there for a long period of time either.
Perfect.
Why do you say that last piece, that they're not going to be there for a long time?
Because the economy is going to keep getting stronger and stronger.
Oh, gotcha.
So they're
It's going to
shouldn't-
dip and kind of go up real quick. Is that what you're saying? Normalize?
I don't know about real quick, but yeah, it's going to
Yeah.
start heading back up for sure. And then, there's a lot of, this is just me,
Yeah, absolutely. Yeah.
right? There's a lot of questions. So far, collections have been decent for April and May. Some people are saying once the stimulus runs out, that's when we're going to see the bigger hit. At the same time, we're reopening though, so
Yeah. No one
I don't
truly
know.
knows.
How
Yeah.
quick can we reopen without causing more issues, I guess.
Yeah, it's a balancing act, that's for sure, man. That's for sure.
So your goal was 10,000 doors by next year, right? And you mentioned at the beginning of the show that you kind of like put a pause on that, right? That's basically what the most people that we're talking to is just they sitting on the sideline waiting to see what happens. Is that what you're doing? And once
Yeah, I
the
mean, we didn't
opportunity
put
starts
a complete pause. I mean, we have a 850 unit under contract right now. We had it under contract before coronavirus, but the seller, great seller, been working with us. So I think we're going to be able to work through it. And we're already seeing some opportunities pop up. Really what needs to kind of catch up is the financing is the toughest part right now. So
Yeah.
especially
Can you go ahead?
I was going to say, especially if you're needing, bridge debt right now is almost doesn't exist.
Yeah.
There's still some lenders doing it, but so I mean, to me, that's the toughest part as far as getting a deal closed.
No, I hear you. Yeah, Bridges was hitting us right now. So yeah, it's not an easy thing. But so you're working with this deal, and do you think if you're, I mean, obviously you try and buy low right now, but you think if depending on how the market's going, you might be buying a little bit high?
I mean, I wouldn't buy anything high.
Yeah, but
you're
I'm saying because obviously the rents and the market is fluctuating right now, right? So is there a concern you think that maybe with this past deal you may have bought a little bit high as opposed to when the dip goes down or in normalizes kind of thing? Or is this a long term, like, even though you buy now, in 5 years or 7 years when you reposition the asset, you should be good, right?
Yeah, you're saying because some people are saying not to buy right now and wait till prices go down further.
Yeah.
My issue with that is you're gonna wait, so you're gonna leave your money on the sidelines. If it's a true opportunity, it's not gonna be there in 6 or 9 months, and two, you're just leaving your money on the sideline for 6 to 9 months when you could be putting it to use. Pricing wise, yeah, I mean, everything we're looking at buying at a good price, at a price where we feel is low enough to where it makes sense. As far as pro forma and what we're putting into the pro formas, I mean, man, that's all guesswork right now. So what we're really looking at is the basis that we're going in. Are we going in low enough to where we feel comfortable that the pro forma isn't really too much of a concern?
So in regards to this deal, right? Because I'm pretty sure you say you're under contract right now, right? Negotiations, and it started before the coronavirus hit us. Have you guys renegotiated due to the circumstances, or you just kept it as it was? Okay.
No, yeah, several times.
Okay, got it. Yeah, that's what.
okay, that's good.
Yeah.
That's good stuff, man. So something I always ask people, because it's not talked about much in the real estate world, but family work balance, right? You're family man?
Yes, sir.
You married?
Three little girls, yeah.
Awesome, man. So I know it must take a huge toll as an entrepreneur, as a real estate investor, everything you've done so far, but what kind of advice can you give to people as far as work-life balance. Obviously, you have to make your significant other in the family feel like they're still the priority and that they are the priority. How do you make it happen, man?
That is a tough question, man. It's not easy.
It's not. Yeah.
Yeah, it's not easy. I travel a lot as well, or was traveling a lot. um, so what I do is when I'm here, I'm present. When I'm with the family, I'm all in, and I make sure that I'm there for those really important, memories that they're gonna have in their life. If it's their first basketball game, their whatever it is, recital, dance recital, a lot of those. I'm there for them, and then when I am here, I'm 100% there.
Awesome, man. Do you time block hardcore? Is that something?
Yeah.
Okay.
I mean, got to. And then I also, I don't usually work from home, so I have an office too. So I like to kind of separate it. So when I come home,
Gotcha.
I'm home.
That's good advice. I've been having an issue with that during COVID. So
Yeah.
Working from home.
that's wrong, man. I don't know how people do that.
Jorge, so just to wrap it up, man, where can people find more about you?
On my website, which is elevatecig.com. They can also email me at Jorge, Jorge, at elevatecig.com. Actually, I don't know if you could see it, but
No.
they're after I did like the 10th podcast, probably put it closer. And then as far as the construction company is JNTConstruct.com.
We'll put it on the notes though. So
Yeah, awesome, man. Yeah, I think we have a new about, but man, thank you so much for coming on, and we really appreciate it, man.
Cool.
Yeah.
I've enjoyed it. Thank you.
Cool.
Thank you, brother.